Good afternoon, friends. The Honorable Union Finance Minister has presented a historic 7th Union Budget on today, 23rd of July 2024. There are 6 major areas of the Union Budget which we will discuss in this video. For a further detailed analysis of the Union Budget, you may join our webinar tomorrow at 9 a.m. that is 24th July at 9 a.m. to 10:30 a.m. In this video, we will discuss 6 areas as I have said. First is capital gain. Very important amendment is the complete removal of indexation for the purpose of calculation of capital gain. No more indexation will be applicable. So, for example, you have purchased a property in 1920 for 1 crore and you are selling it today, and mind that this will be applicable from all properties sold from 23rd July 2024 itself. So, you have sold that property for 1.25 crores. Now, the capital gain is 25 crores. In case indexation would be applicable, the capital gain would be nil after indexation, but now on this 25 lakh rupees of capital gain, a long term capital gain of 12.5% instead of 10%, that is the increased rate of capital gain taxation, would be applicable, and a tax of 3.12 lakhs would be payable. This is a major amendment in the budget in the area of capital gain. Short term capital gain has also been increased from 15% to 20% on specified assets. Security transaction tax on futures and option trading has been increased from 0.1% to 0.2%. Very important for capital markets and for investments in India, and a long standing demand of industry was the complete abolition of the so called angel taxation under section 5727B. Now it has been accepted, and in case of overvaluation of the shares of the startups from the assessment year 25-26, no tax would be applicable. So, this is a major relief for the startups etc. on share valuation, which was a major area of dispute. Next is very important and a hidden amendment under section 37 of the Income Tax Act, wherein the settlement proceedings payments would not be considered for the purpose of computation of income tax and a deduction under section 37. To cite an example, under GST there is an amnesty or a settlement scheme which has been tabled in this budget under section 128 capital A, wherein for the first 3 years under GST, any demand of interest and penalty would be relaxed in case payment of tax is made under section 73 of the CGST Act. Possibly after this amendment in the income tax, such payment for settlement proceedings would not be allowed under section 37 of the Income Tax Act. This is a major amendment. However, it has not been highlighted till now. Second is the threshold for deduction under section 40B for partners' salary etc. has been increased from 3 lakh to 6 lakh rupees, and the deduction has been increased from 1.5 lakh to 3 lakh rupees. But in the same vein, a new TDS under section 194 capital T has been introduced for payment of salary, remuneration, commission etc. to partners at the rate of 10%. These two are very, very important changes for partnership firms. Under TDS provisions, a long-standing demand of industry has been somewhat accepted, wherein Section 194Q TDS at the rate of 0.1% for sale of goods has been brought under the ambit of low income tax deduction certificate or nil income tax deduction certificate under Section 197 of the Income Tax Act. So there was always a complaint that in case the buyer does not deduct TDS, then the seller has to charge TCS, or in case the seller charges or levies TCS at 0.1% under 206C1H, then the buyer need not deduct TDS under 194Q. Now, by bringing these provisions under 197 for low TDS deduction certificate, there has been a somewhat relaxation. However, a further relaxation for complete non-dependence of 194Q or 206C1H, or complete abolishment of either TDS or TCS on sale of goods, that has not been accepted, but still there is some headway in this demand for trade and industry. Various rates of TDS which were 5%, like 194D insurance commission, 194(1)B have been reduced to 2%. TDS in the case of e-commerce operators under 194O has been reduced from 1% to 0.1%. The new tax regime for personal taxation has been changed, and specifically there are 3 amendments. Number 1, the slab rates in case of new tax regime will be 0 to 3 lakhs exempt, 3 to 7 lakhs 5%, 7 to 10 lakhs 10%, 10 to 12 lakhs 15%, 15 to 12 lakhs to 15 lakhs 20%, and more than 15 lakhs would be 30%. Standard deduction has been increased from 50,000 to 75,000. The deduction for family pension has been increased from 15,000 to 20,000. For national pension scheme contribution by the employers, the threshold limit has been increased from 10% to 14% of the salary. So, the new tax regime becomes more lucrative, and more or less there is an additional benefit of 17,500 to 30,000 or 35,000 as the case might be. The income tax rate for foreign companies has been reduced from 40% to 35%. The time limit for short or long term capital gain have been synchronized into 2 broad slabs. In case of listed securities, the slab would be 12 months, and in case of all other assets, the slab would be 24 months. These are the various amendments in the Income Tax Act. However, a major announcement has been made that in the coming 6 months, complete revision, reviewing or revamping of the Income Tax Act may be done, and the next budget in February 2025 may see a complete overhaul of the Income Tax Act. In indirect tax, as proposed by the 53rd GST Council meeting, two major amendments have been done, wherein for 1718, 1819, 1920 orders under section 73, in case the payment is done by 31st of March 2025, then interest and penalty would be waived off. So this is a amnesty scheme under GST. Similarly, for the same 3 years, the time barring period for claiming input tax credit is increased to 30th of November 2021. So these are the major announcement. In addition to this, a new section 74 capital A has been introduced, wherein now there would be consistent time barring period for section 73 and 74 of the CGST Act, and the time arbitrage to the field officers would not be available to levy section 74 for suppression, willful misstatement or fraud in case time is barred for section 73. In customs, major tax rates or duty rates have been amended. The broad policy for making a reduction of customs duty is India wants to become a manufacturing hub, and therefore the customs rate on capital goods and raw materials is being reduced in many sectors like textiles, leather, solar cells, lithium ion batteries, etc., so as to produce in India for the domestic market as well as for exports. Therefore, friends, a lot of policy amendments have been made in this budget in the tax area. There has been a major focus on employment and skill development. Various schemes for new employment for employers are also there. Trade and industry must see these employment skills so as to take maximum benefit. For more analysis, as I have said, please do stay tuned for tomorrow's webinar at 9 a.m. Thank you for watching. Do stay tuned. Do like, subscribe to this channel. Thank you very much.